Happy Friday, friends. Chris McWilliams here, EST Home Mortgage. Just giving you a little video update and this week in mortgage. And so we have a good trend looking on mortgage rates. Mortgage rates continue to trickle downwards. We are in that 5% range. This is great territory. Every time we've been here over the past few years, we've kind of bounced back up. So let's hope we can stay here for a few weeks to a month or through the end of the year, because for purchases, we need to stay here for a little bit for this to, kind of come to fruition with lower payments. With refis, you're able to lock in kind of right away. So, but hopefully this can help us. Rates are always published on the website. They do change at any moment, and so we have a little blurb down there. So families know that. But it's good to see interest rates in the fives. So, and then when we think about a couple of economic updates since the BLS is not reporting due to the government shutdown. And so this is a really good tariff tracker. So this comes from the pricing lab there. And you'll see we were in a really good downward trend for, total inflation. And then now you'll kind of see once this was Liberation Day. And you'll see here, right, we're starting to see this inflation come up. That is going to come into more of the inflation numbers. So it's going to be really hard for the Fed to get to their 2% target potentially using the current models of statistics. I think that they could adjust those, but they're probably not going to do that unless the new Fed chair, which is coming, wants to make a change there, which would be welcome. But so let's keep an eye on the inflation due to the tariffs. And then the other really great article this week that I saw was from Lacey Hunt, and it's a kind of a long article, but a few things here. The capacity of industry and manufacturers is quite high. So when the capacity is increasing, that means that usually is downward pressure on inflation. So that would be a really good thing. And then total real world liquidity. These are my two favorite graphs from this article. You'll see here the real world dollar liquidity, and you'll see that we're still in a downward environment there. So, we're getting close to being back to pre-pandemic levels there. So hopefully that'll be good. And then this is real gross output. They're trying to use this rather than GDP. And you'll see here that they're saying that, real gross output is down. And that's why potentially maybe the economy does not feel as good as the GDP numbers or kind of buffed up employment numbers that we had over the past couple of years, be over the top rosy. So now we're starting to see those job numbers come more into play. But with the shutdown, the jobs numbers are kind of on hold. And so this gross output is really interesting. I do think it's more of an explanation, because I think most of us, especially in real estate, we have seen a tougher market. And then I think a lot of people I talk to think the economy is much harder than what the media or national reports kind of relay there. So that's kind of a couple of things that we saw. Keep in touch if you need anything over the weekend, anytime during the week, and enjoy the weekend. We'll talk to you real soon. Thanks, friends. Bye-bye.